Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get you the headlines. Nifty and Sensex recover from day's lows, led by gains in PSU banks. Nifty Bank hits an all-time high.
The Reserve Bank of India bought $5 billion through a long-term dollar-rupee swap auction to infuse nearly 35,000 crores into the system.
The Tata Group, GIC and SSG Capital will invest 8,000 crore in GMR Infrastructure's airport business.
Prime Minister Modi says India shot down a low Earth orbit satellite, joining the US, Russia and China in an elite group of nations that have the capability to target satellites. We'll get to the Prime Minister's announcement in just a short while. Quick check on how the markets have been faring this afternoon. Yathan is here with a cooler look.
Afternoon, Harsha. A couple of minutes back, the markets were nervous. We had the volatility index which shot up intraday and has seen some, cooling off after, we had announcements relating to the satellite mission. Now, if you look at the Nifty, it has been doing well, almost 50 points up. We are above that 11,500 mark on the Nifty. Advance decline similar to what it was yesterday, 3 advances to 2 declines as far as Nifty 50 is concerned. Private banks are making the move. So we have the likes of Yes Bank and IndusInd Bank up anywhere between 4.5% to 5.5%. What's also doing well in trade is the likes of JSW Steel, SBI. So it's more of financials making a move on the Nifty today. What's not doing well is a bunch of oil marketing companies and PSU stocks. So we are looking at HPCL and BPCL, both of which are down over 1.5%. So is the case with NTPC, some profit taking coming in after yesterday's 4-5% move, 1.5% down for NTPC. Eicher Motors ahead of the auto sales number, which will be coming in a couple of days, is also nervous, 1.5% down for that one. In the active securities, we have GMR Infrastructure. That stock is in focus, 2% up for that one. Yesterday was up 10%. They have agreed to sell majority stake to private equity players. So on the back of that news, we have GMR Infra in focus for the airport business. Also, PNB and Idea Cellular are the two other stocks which are quite active in trade today.
Yatin, thanks so much. Let's quickly do a check on the money markets as well. The currency just a touch weaker today, 68.90 or so. Bond markets on the new 10-year bond trading at about 734 on the yield. Now, yesterday, the Reserve Bank of India successfully concluded a $5 billion long-term USD INR swap. It infused about 35,000 crore in liquidity into the Indian markets. Now, many interpretations into why the RBI went down this route and what it implies for future policy. Joining us to talk about that and the broader money markets is Jayesh Mehta, Managing Director and Country Treasurer at Bank of America Merrill Lynch. Good afternoon, sir. Thanks for joining us here. I was joking with someone that there are as many interpretations of this swap plan in the market as there are banks. But I'll give you the final word into why you think the RBI went down this route and what it signals.
So I think there are 2-3 things which happens together with this one. A, of course, is when you do OMO purchases of government bonds, it's again your asset liability allocation. So it's how much is the asset you want on the rupee side and how much is the international asset you want. So that is the larger question. So that's one. And secondly, of course, this could have been done in a situation only when you have flows coming in. So this really helped, and of course it also gives you a chunkier one, because if you do open market operations, you do maybe 12,500 crores, maybe 14,000 crores, 15,000 crores a week. It really takes time. Whereas this one was a test one, $5 billion. You put in 35,000 crores in a single day, right? So that's something really helps. I think it was always there as a tool. But yeah, doing this as a by way of auction, that's the first time they have done it, which is much better and transparent, and it infuses liquidity in a day. So I think that's a better way to do it. So maybe with this being successful, I'm quite hopeful they will use this in future too.
Jayesh, hi, this is Harsha. So does this, in a sense, fulfill the need of liquidity in the near term? What is your assessment of liquidity for now, and the scope and need for OMOs here on? Is that reduced as well?
No, so definitely now it's a question of what do you think is the adequate liquidity, right? Like somebody like me, old school thought, still believes that when your inflation is in control and you're looking at growth, you should be at a surplus liquidity of 60 to 70,000 crores, right? But I think nowadays there is a theory like, liquidity has to be negative. So, you play between 50,000 crores negative to maybe 2 lakh crores negative, but it has to be negative, which I don't personally agree. I believe on both sides you should have 75-80,000 crores plus or minus depending on the stance. If it is hardening stance, then the liquidity has to be short by 70-80,000 crores. If it is softening stance and accommodative stance, then it has to be 70-80,000 crores surplus. But so that's the debate. One has to really go into larger thing. But if you are looking at system liquidity after this, maybe it would be negative still 30-35,000 crores. But as the currency, as the election comes, currency, and as your growth comes in, the normal liquidity infusion requirement is much larger. So we would say there would be another at least 2 lakh crore liquidity requirement for FY 19-20 minimum.
But Mr. Mehta, that would be...
at this juncture, particularly for April, May, we should be fine.
Yeah, I was going to ask that liquidity requirement will only come through in the second half of the year, right? As the new financial year starts, you will see some natural liquidity flow, some
Absolutely.
of the tax money come back. So there is no near-term OMO option now from April, would you say?
Yeah. In fact, April, May, we don't really expect any OMO options coming soon. Even if, and now of course, it's not necessarily liquidity, they will use only OMO. They could also use this swap window, which has been successful. So maybe once we may see something in June, it could be a swap window, it could be OMO. And then again, like similar to last year's pattern. But I would say last year we actually delayed it a lot. Maybe we should start building it. Of course, we'll have to see how the growth pans out and the currency in circulation grows, right? So these two are also very, very crucial for currency, for liquidity management.
Mr. Mehta, I just want to segue into a broader issue related. We thought we'll get the first half borrowing calendar yesterday. We didn't get it. Maybe we'll get it later today. But what do you think is the capacity of the market to absorb borrowings at this stage? The gross borrowing number was quite large, as we all know, at 7 lakh crore. If they do what they had done, excluding last year, which is front-load borrowings, what do you think the market response will be?
No, I think that's what they should be doing, right? I think last year they did try to do 50-50. I would say typically front load the borrowing. So, you have definitely pressure because the issuance is there. But then at least kind of post September, October, the market kind of eases up a little bit. And that gives you a room for both the government as well as the market players to absorb the situation. So, and typically, as I said, like April, May, your liquidity is really good. Of course, there are a couple of challenges which we have because markets now used to OMOs and of course people have short memories. So last 6 months we have been living on OMOs and if OMOs don't come, traders are not going to like it. I personally think OMO or no OMO, basically as long as you have liquidity surplus in the system, I think the rate transmission for softening bias happens. And that also brings appetite for bonds, that brings appetite for everything. So I personally think, I still believe that, you have softer rate, you need to have surplus liquidity. We have seen this earlier in Jan 15 to March 16, while we cut rates 4-5 times, your non-benchmark G-Sec yield was actually 10 basis points higher. That's because you didn't give liquidity. So I think liquidity is very important.
You're advocating a CRR cut, so basically without saying it.
In whatever form. Not CRR cut. You can do one more swap. You can do aggressive. It's like you don't need to wait till last. Right now, and now, it is not that much negative, right? So you can actually manage by maybe 2-3 OMOs, but you have to be in the market. You have to manage measuring it. And most importantly, firstly, you get, the central bank needs to be convinced that it can be positive and that's good, right? But as of right now, the feelers which we get is like, they want liquidity to be negative, at least 0.5% of NDTL. So that's where the dichotomy is.
One last word, Jayesh, and this is on the currency. Where do you see the currency, at least in the near term? We've seen significant amount of FI money coming in, at least in the last couple of weeks.
Yeah, FI, of course, money is also to link with swap, because it does attract FPIs to actually buy with the swap being there. And of course, because the swap announcement, the market, secondary market also came off at least for 3 years. You had 3-year bond issuances. There is clearly, on a fully hedged basis, there was a gap of almost 2.25%. That was very, very attractive for FPIs. So that's definitely coming on the debt side. Equities, of course, I think we are more or less doing a catch up because when the world was receiving, the other emerging market was receiving money and flows, we had our border issues and things like that, and that's what we got catch up later on. So I think that month has been good. I think we also seeing a lot of FDI flows, right? So I think the flows wise, we are doing pretty well. Let's see if this momentum continues, then we should be back to normal. But at this moment, doesn't see why it should reverse it out. And globally, of course, US, the way it is definitely looks like EM should benefit out of it.
Mr. Mehta, I have a couple of more questions. Sorry, since we have you here, I'm taking the chance to ask you everything. So what is your assessment of the corporate bond side of the market? You're still hearing a lot of corporates complain about the fact that spreads are still very high. GSECs may have eased, but their spreads have not eased. Do you find that worrisome? To me, isn't it just a reflection of, a credit shock that happened to the market? The market will take a while to bring spreads down. As risk aversion eases, it will happen.
Yeah, but I think we have come to conclusion that GSECs also yield, right? So we have cut rate and GSEC yield, if you look at old 10-year benchmark, is the same as where it was before the rate cut, right? And this was a surprise rate cut. A lot of people were not even expecting, and yet it is where it is, right? So it is also a liquidity factor, and I think it's the whole curve. So your GSEC spread over the repo rate is also higher, and therefore once that spreads are wider, naturally your GSEC spread, corporate spread over GSEC is also higher. I think both these factors really matter. I think it's all coming back to liquidity. To an extent, in spite of having such a large buyback of bonds, you still are like in 125 basis point, 125 basis point higher than the overnight for 10 years. And even if you expect, like most of the people are expecting a rate cut in April, some are going to the extent of 50, but 25 is more or less built in. Even with that, 7.5 old 10-year benchmark is high, and based on top of it, you have corporates maybe at around anywhere between 830 to 850 before the swap announcement. Post the swap announcement, it has come off by almost like 20-30 basis point.
Okay, so you see that also as a consequence of liquidity mostly. Last question, Mr. Mehta, and this is on that voluntary retention scheme of the RBI. They've managed to get about $1 billion, I think 65 or so, 6,500 crore I saw on the corporate side last when I checked. What is the response on that according to your view, sir?
So I think that is going to take time, right? It's a great scheme because, if you really look at it, our whole FPI thing was kind of half-hearted because always we believed that brings hot money, and we were kind of vindicated last year when you had $12 billion outflow in a matter of 20 days. We saw that even in 2013. Now, with this kind of situation, I think the central bank would be more comfortable to do a VRR, but as long as these old limits are available, naturally people will use VRR as an option. So maybe right now not go away on the VRR side in a hurry, but as and when the old limits get filled up, I think people will move dramatically to the VRR. And I think once we move to the VRR, central bank will be more open to open that limit larger, because at least that's like your ECB, right? At least the 3-year cash flow. So from that perspective, they would be more comfortable and they would open it up much larger than the 5% outstanding.
Jayesh, we'll leave it there. Thank you so much indeed for joining us with your perspective. Jayesh Mehta from Bank of America, Merrill Lynch. India has joined the US and Russia and China in an elite group of nations that have the capability to target satellites. In a televised address to the nation, Prime Minister Modi said that India shot down a low Earth orbit satellite, noting the capability that was crucial for India's security.
अब तक दुनिया के 3 देश अमेरिका, रूस और चीन को यह उपलब्धि हासिल थी। अब भारत चौथा देश है जिसने आज यह सिद्धि प्राप्त की है। हमारे वैज्ञानिकों ने अंतरिक्ष में, स्पेस में 300 किलोमीटर दूर LEO, लो अर्थ ऑर्बिट में एक लाइव सैटेलाइट को मार गिराया है। LEO, लो ऑर्बिट में यह लाइव सैटेलाइट, जो कि एक पूर्व निर्धारित लक्ष्य था, उसे एंटी सैटेलाइट A-सैट मिसाइल द्वारा मार गिराया गया है। एंटी सैटेलाइट A-सैट मिसाइल भारत की सुरक्षा की दृष्टि से और भारत की विकास यात्रा की दृष्टि से देश को एक नई मजबूती देगा। भारत ने अंतरिक्ष क्षेत्र में जो काम किया है, उसका मूल उद्देश्य भारत की सुरक्षा, भारत का आर्थिक विकास और भारत की तकनीकी प्रगति है। आज का यह मिशन शक्ति इन सपनों को सुरक्षित करने की ओर एक अहम कदम है।
L&T is inching closer to acquiring controlling stake in Mindtree. This in turn has prompted the mid-cap IT company to put its own share buyback plan on hold. In keeping with regulations, the board has now decided to set up a committee of independent directors to look at L&T's offer. Agam Vakil spoke to Rosto Ravnan, the CEO of Mindtree, to get his take on the entire issue.
Under the law, there is a very specific obligation that is levied on the independent directors to form a committee amongst themselves and make a recommendation to shareholders on the offer price that L&T has given in its open offer. So that's the sole objective of this committee, to evaluate all the dimensions of the open offer announced by L&T and make a recommendation to shareholders whether they should accept or not accept this offer. That's the sole purpose of this committee.
Also, if you could tell me about where your large shareholders stand. I mean, by that I mean institutions. So what is their thought process? What do they intend to do? At this point in time, from what I understand, to a certain extent, at least some of them have voiced, they have suggested that they would favor Mindtree in this case. But do you think that there are any circumstances out there that may lead them to change their mind? If you could just give me an idea about the larger picture when it comes to your conversations with the larger shareholders.
I think our large shareholders are completely aligned with Mindtree's interest. They are very vocally supporting us because this team, through the strategy and the culture of the company, have delivered exceptional results. To quote one of the shareholders who came out and made a comment to media yesterday. So I think our investors have recognized that the team at Mindtree has created long-term value. They are also very sharp observers of performance. For example, Mindtree has done really well over the last few years and so on and so forth. So I think we are confident that we have the support of our large shareholders in this very interesting times for Mindtree.
What's the management of Mindtree? 3 marquee investors, Tata Group, GIC and SSG Capital, will invest 8,000 crore to buy a stake in GMR's airport business, where 1,000 crore will be pumped into the airport arm. The remaining amount will be spent to acquire stake held by other GMR subsidiaries. The infusion also is expected to cut down their debt significantly. We spoke to Saurabh Chawla, the Executive Director in Finance, and Sushil Modi, Group CFO of Strategic Finance at GMR Group, to get a better sense of the company's plans. Listen.
The consolidated debt of 20,000 crores obviously will come off by about 8,000 odd crores. So that's a straight math. So the consolidated debt that will remain is about 12,000 crores. But yes, on the airport side of it, it's the 6,000 odd crores which is there on the standalone airport business. That will also come off to a minuscule number.
I like the optimism as well. But gentlemen, just one question on the GMR Infra, which will now be devoid of, devoid is a wrong term maybe, but separated from the airports business, right? That's an intention that you've stated, that you will demerge the airport business. The GMR Infra company will have all the other businesses. What happens to the deleveraging and the operations at that business before we come to the airports business, because that'll be a slightly lengthy conversation? What happens there? 12,000 crores or 13,000 crores of net debt still exists there, and the businesses for the space at large haven't really come out of the woods as yet, not just for you. How does that picture look like?
No, so let's understand our overall debt number. The 20,000 crore that we just spoke, of which, as I said, 6,500 odd crore was the corporate debt, right? The another 6,000 odd crore, or part of it, or rather 7,000 crore, is the airport debt. So once you take out the airport debt and the corporate debt, then what is left over is basically another 5 or 6,000 odd crores, and which is again more primarily against our various road assets. And the road assets, as you know, is all annuity and some bit of a BOT project. So that those have their own revenues and own earnings to service those debt. And similarly, we have some debt around our energy vertical in terms of the coal mines. So those all again has a significant earnings. Our coal mine itself at the mine level last calendar year had an EBITDA of somewhere around $170 million, and in that we own 30%. So net henceforth, when we talk about airport business and all the rest of the businesses, what we are talking is the rest of the businesses having another debt of let's say around 5 to 6,000 crore, and that will have its own cash flows irrespective to service those debts on an ongoing basis.
Shifting focus to oil now, crude prices are set to post the best quarter in 17 years as production dropped across the globe. Bloomberg's Aaron Clark lists out some of the reasons for the sustained rise in crude prices.
Oil prices are quite high right now, relatively to where they've been. WTI is up about 32% this year, trading at around $60 a barrel. Brent, the global benchmark, is up about 26% this year so far, trading around $68 a barrel. The main factor for this is really these OPEC cuts that were implemented in January and are scheduled to go through the first half of this year. We've really seen that curb global inventories, it's curbed supply, and that's really sustained, kept prices higher. The other factors, of course, have been disruptions from Venezuela and Iran, but those are the main factors that are driving it forward. I think looking forward, we'll have to see if OPEC continues to implement those cuts. Like I said, they're scheduled to go through the first half of this year, but we'll have to see if they want to continue them or if there's an exit strategy after that.
More on this. Jeff Currie, head of commodities at Goldman Sachs, expects oil prices to stay range-bound all through 2019. He pegs the range at $75 to $80 a barrel.
This market today, it's tight. You're drawing inventories at a rate of 1 million barrels per day. The market is backwardated. In fact, that point about the fundamental physical market has to drive the paper market, dated Brent drove paper Brent higher. And you can see it and look at the spreads. We're getting more backwardated. So you have a really tight market today. But as you look out, you have that pipe capacity coming out of the Permian going into 2020, and so the back end is staying anchored. This is an ideal environment for investors, at least for oil.
Great chart that just kind of reminds all of us that the impact that shale has had and how dramatic it's been. So what does this mean for pricing over, I don't know, what kind of visibility do you have?
Well, at least, over the next couple of years where you have a comfort, you're really range bound. The low end, if something bad happens, you go down and probably test 45 to 50.
Yeah.
You get really tight like we did last year, which you could see again this year, go up in that 75 to 80 range.
I always wonder, Jeff, what that means then for future investments and future production. These guys have to make their investments. They've got to spend their money ahead of time before the payoff. So what does it mean for that?
Well, investment is down. Alex and I were talking before the show here about big oils becoming big energy.
Yeah.
Because of decarbonization, you're not seeing the investment that you historically would in dirty products, oil included. So as you look out further, let's say 5-6 years, you start to see a shortage due to the investment. But I like to be careful about calling those big structural bull markets. People were talking about it in 1995. It didn't happen until 2004.
So then what's your prediction for the back half? When we have all the Permian coming online and the pipelines picking up, and then OPEC delayed that decision until June, what's your base case?
Our base case is we go back to 60, go up to 70, and then come off.
But does OPEC continue the cuts till 2020? Or
this market will be balanced most likely by the end of April, early May. So they'll have to start talking about exit strategies, and they want to because they want to keep that back end low. They want to have backwardation because it reduces the ability for E&Ps to hedge.
The key, though, to the back half of the year in your call has to do, I'm sure, with what's going to happen with Iran. If you come inside the Bloomberg, it shows exports really diving after those sanctions. We don't know about the waiver situation. How do you factor that into your balance call?
Well, we see Iran coming off about another 300,000 barrels per day. It's running around 1.45. You lost 200. But let's look at North Korea, Iran, and Venezuela. Which of those three does the current administration have the best chances of forcing a regime change? Venezuela. I think they'll concentrate more of their effort there. Now, the headline reduction in the waivers come this May will likely be much larger because countries like Italy are not using them. Right. And places like Japan are already cutting off their imports of the Iranian oil. So we're comfortable with that 300,000 number. Headline number we may be bigger, but we think the administration is going to focus on Venezuela.
Jeff Curie of Goldman Sachs, out of time on the show. Thank you so much for joining us.